afternoon. How are we all doing? Afternoon, Monkey, Evil, Jeremy, Fletch, Boomo, Baggy, Steve, XRUpdate.news, Virginia. How we doing? Friday afternoon. Afternoon, Neo. Friday afternoon on a short week, even better. And the sun's out. Would you believe it? Sun is actually out in the UK. Amazing. Afternoon, Callum. Right. So this afternoon we have the CAD unemployment rate coming out in about 10 minutes' time. We've had the GDP for the pound this morning. Big positives there, which is good. So we were forecasting a 0.4. We got actually given a 0.6. And the forecast month on month was a 0.1 increase, dropping from a 0.2, and we actually got a 0.4 increase. So all very bullish for the pound this morning. However, following yesterday's comments from Bailey, obviously, which were massively bearish for the pound because we were looking at potentially reducing interest rates quicker than expected. It hasn't actually had much impact at all. So we're still looking fairly bearish on the pound. I've done some drawdown control. When was that? Yesterday? What's going on there? Oh yeah, it did. So not really an awful lot of movement today off the back of that massively positive news, which is fine. But yeah, so no ADRs today. It's a very, very flat day so far. Nothing's hit ADR. Nothing's been extended on the weekly more than we had yesterday, which was all the yen pairs. Basically, every single yen pair is extended beyond its weekly range, but nothing else has come to fruition yet at all. So we'll see what happens with the CAD this afternoon, but no real impact on that pound. So yesterday, Bailey went on about obviously dropping the interest rates in June. The forecast is not. I don't think it's going to be June. I think it's going to be more like July, August time. There's all sorts of talk about it at the moment, but the overnight news, there's your GDP. Obviously, we had a big spike on it, but not dramatic. I think the pound moving forward, we're probably going to sit around and just make sure that euro rate happens, and then we'll probably get a lot more weakness coming in. But obviously, it was fairly bearish what was said yesterday, although the market didn't seem to react an awful lot to it. So overnight, apart from that, we've had very little. The Bank of Japan, again, closely monitoring recent yen weakness. The government will closely collaborate with the Bank of Japan. So the yen, again, this yen not stopping, is it? So that yen movement, obviously off of the intervention and the second intervention move they put in, the market's just grinding back up against it again. We haven't moved anywhere for the last couple of days, but things like the New Zealand dollar totally undone that second intervention. The pound's on its way back up as well. Euro on its way back up. The Swiss has undone the intervention. The Aussie undone the intervention. The CAD on its way. So this market now, since that second intervention, not done a thing. So the Bank of Japan are closely monitoring this, because the last thing they want is that to be a failed intervention, because then it puts pressure on retesting the highs where they did that. And obviously to do that, and that costs them a hell of a lot of money. So interesting to see what happens over the coming days and weeks. But they are closely monitoring FX moves again. So just be warned if you are trying to fade these yen moves. ECB, lots of stuff today came out about the ECB. We had an ECB monetary meeting minutes release. Plausible with the government governing council will be in a position to start easing monetary policy in June. So nothing new there. We were expecting it all to happen in June. Lots of other talk, but just backing up basically what we thought, which is bearish for the euro. And as you can see, the market's done absolutely nothing with it at all. So, yeah, load of rubbish. It took off some euro CAD yesterday. And I also closed out euro odd. Yeah, yesterday as well. That was the H1M5. I've also tidied up my RSIs today. Just gone 30, 20, 10, 70, 80, 90, just to make them a little neater. It's nice to have a house cleaning every now and again. Afternoon, everybody else. Steve, thank Crunchy, it's Friday, yeah. Afternoon, Ross Reether. Johannes, on that RSI 2 set file you created, has the idea of the 2 running in the backtest. What? On the RSI 2 set file you created, hat is the idea of the 2 running in the backtest. Running it in the backtest. What is the idea of the 2? It's an intraday strategy, basically, for markets that aren't moving. Yeah, that's all it is. RSI 2 on the daily time frame. It's a very, very well-known strategy, been around for decades. People still trade it today. It's a scalpy strategy. Just quick in and outs, basically, on intraday movement. Yeah, so if you look at the daily time frame, when we got 5 minutes, and then stick a 2 RSI on it, you'll see, obviously, doesn't matter if you use a median or the close, but all you're doing is basically jumping in. I'm personally using 90-10, but some people use varying levels, but basically just jump in short and you get out quick. Jump in short, get out quick. Jump in short, get out quick. In, out, in, out, in, out. Literally out. Same day, next day. Gone. It's a scalping strategy. Yeah. But it will also not be right, as everything is. Yeah. Moving averages make nothing. It's not a trend strategy. Doesn't use moving averages at all. The guy that invented it, Larry Connors, was an S&P trader and he used this. This was his S&P strategy, long only. So it was initially designed to be a long only S&P strategy. But I'm just adapting it to FX, basically. Or trying. I'm having problems. I'm a bit overwhelmed by results, to be honest. I don't even know where to start with it. I think I'm just going to stick it on an account and trade it and see what happens, because I found H4 variations of this using daily, which are so much more effective. I found all sorts of tests. I've literally been testing it for a week now, and I've got more results than a results shop. Literally, I've got hundreds of thousands of system parameter permutations of this strategy across multiple instruments, and it just makes money. But it doesn't make a lot, which is what I'm looking at. I'm trying to figure out how I want to use it, because I can make it make loads of money. No problem at all. But there are so many ways. There are literally thousands of permutations that make money, and it's a case of where do you start? So I'm trying to find a confluence across multiple instruments that is good and bad for a portfolio, but I'm struggling, to be honest. I've just started on the 4 hour testing, and it's very nice on the 4 hour, using daily RSI extensions. I've got a strategy which gets in with multiple positions and adds into the winners, and just gets out every day, which is producing some very nice results. But again, it's one of 32,000 combinations that work. So I'm just a bit overwhelmed with it, really, trying to figure out the best way to use it. We know it works. It's been used for decades, but it's trying to make it work for you. That's the tricky bit. worst case scenario, just stick a daily chart on, and if it's below RSI 2, buy it, and then next day get out. Simple as that. That's the original strategy. Or wait for RSI to get from there to there and then get out there. However, I've found actually that's not as good as using an end of day in profit exit, which is what I'm using. But test it, stick it in the tester and watch it, and then you'll figure it out. Morning, everybody else. Let me just get US dollar CAD up because the news is out in 40 seconds. I don't think I've got any CAD exposure on. Yes, I have got loads of CAD exposure on long. New Zealand dollar, US dollar CAD. Yeah, I'm long. So we'll see where the US dollar goes, or rather the CAD goes on the unemployment. Spreads widening. 10 seconds to go. Afternoon, everybody else. Jux, Wavy, Kennelly, it's time. Jeremy, why did you use to time the Euro CAD exit? What did you use to time the Euro CAD exit? Thank Jesus. That's a massive miss on the, rather hit for the Canadians on unemployment. Straight down into the weekly high. Blimey. There you go, there's an ADR. So that's massively positive Canadian. So the Canadian unemployment figures have come down. Unemployment rate is 6.1 on a forecast of 6.2. It's not that good, guys. Come on. It's not that good. I'd be very surprised if that holds. That'll probably be back up there later. It's not that good. It's 6.1. It's the same as last time. So I don't know quite why the market's reacted that heavily to it. Mind you, yeah, I'm short on New Zealand dollar CAD, so I'll happily take that. What was the question? Euro CAD. Short on that as well. Look at that. Hit my TP. Didn't get me out. Brilliant. Thanks for that. Spread was obviously so that's where the price got to. Those are my TPs. That's the spread. Nah, don't get him out because it might pop back up and stop him out up here somewhere. Thank you, Mr. Broker. What did you use to time the exit on the Euro CAD? Well, I haven't exited it. I'm still in it. You mean this one here? Basically, we had news yesterday. So I got out before the news. Basically, that was it. The news. So I took that off because of the news. And then if it pushed back up, I would add it back on again. Can we just get back down there and do my TP now, seeing as you missed it first time round? Blind as a bat. So that TP there was because of this propulsion gap. And obviously, as you can see now, the propulsion gap's been filled. Didn't bother to get my order, but it filled the propulsion gap, missed me completely with the TPs. So, yeah, not impressed. So yeah, that was it. That was the exit. Afternoon, Amy, Champagne, Michael, Mark. How are we doing? Give me one sec. Okay. So yeah, so this I would imagine this will probably retrace unless there's some reason they really want to drive that Canadian dollar, but it's not actually that big a hit if you look at the ADRs. It's just tapped into ADR. So CAD Swiss straight into ADR, not really gone any further. Euro CAD ADR, obviously, at my TP. I don't know if I should shut that, to be honest. I'm just going to shut your CAD. I'm going to shut it because I've banked already on it. So that yesterday was already banked. That is, again, more profit. So I might as well just stick it in the bank. It's only a little tiny 0.12, but it is profit. Profit's profit. So that just reduces my exposure on the Canadian dollar. So I'm hedged on it now. Pound CAD, straight into ADR, straight out. Again, propulsion gap fill, look. So we've just come back down, filled those two, tapped into this one. Immediately, it's put the brakes on. So they didn't have enough momentum to actually make a move on that. New Zealand dollar CAD pulled straight back into the lows. Just hit the lows and bounced off. There we go. So yeah, nothing particularly interesting on that. But we'll see. That's a big reaction for a very small number. It is obviously the unemployment change is up. So the forecast was 20, we got 90. That's probably what that reaction is based on. But the unemployment change is not the thing that the banks are looking at. They're looking at the unemployment rate. This is the important part. Unemployment change can be caused by a number of things. Companies opening new offices, companies closing offices, lots of jobs being created, lots of people that were on the dole suddenly getting jobs that have been vacant and dormant for months. Yeah, the unemployment rate is a steady sort of bill paying, if you like, number, which is why the market pays attention to that. That's what we're looking to control, the unemployment rate. So I think that's a knee-jerk reaction to that. That is better than expected, but it's no different to what it was last time. So nothing's changed, really, has it? So therefore, the market shouldn't really change and react to it. So hence me getting out of that short on that one, because I get the feeling we'll possibly be back up here in the next hour, but we'll see. Right, so those are all your ADRs. Obviously, they were just normal ADRs today. Oh, what's that? David, thank you very much for the €5. No, not even €5, $5. Thank you very much. Who's the best? Lee is. Happy Friday, my guy. Happy Friday to you as well. Let's celebrate their 10th super on a live stream. That's your 10th super, apparently. 10 supers you've done. Were they all me or not? I don't know. I'll have to look back. Thank you, David. Much appreciated. Right, analysis time. So we'll see what happens with that, but I would suspect you'll probably get a little bit of a pullback on that one. 3 o'clock, we've got University of Michigan this afternoon. So again, there is a potential for that to drive the US dollar. University of Michigan is a very hit and miss news event. So this is a survey of 500 people. And it's kind of a sentiment as to what they think is going on with the economy, how everything is, how they're feeling, that sort of thing. I've always been shocked as to how much the market reacts to this, because they're basically interviewing 500 people and asking them how they feel. And if it comes out as a big number that's different to what they thought, the market reacts massively. So they do use it as a leading indicator. I still don't really understand fully why, but it can move the market substantially. My theory behind it is it always comes out on a Friday at 3 o'clock. It's always the last news event of the week. And there is always an opportunity to take profit on weekly moves on Friday afternoons. So I personally get the feeling it's got absolutely nothing to do with fundamentals. It's literally, as soon as that news comes out, we know a load of people will be trading the news. There's liquidity available. Let's take profit. I think that's basically what it does. But it does sometimes move it. Sometimes it's flat as a pancake. And it doesn't really matter what that number comes out at. It will do what it wants. So we'll see what happens. But that's at 3 o'clock this afternoon as well. So just keep an eye out on the news for that. Just going to see if there's any reaction to that. Canadian swaps show chances of Canada rate cut in June at less than 50%. Yeah, we know that already. So there's no change from the market outlook on when they're going to drop the interest rates. Again, we're expecting Canada to fall in line with the US at the moment, and the US aren't changing until the end of the year. So shouldn't really be any impact on that. So this is highly likely to be a knee-jerk reaction, and obviously undo itself. But we'll see. You never know. It could drive a move. Right, so those are your ADRs. RSIs, it's all the same. There's not really anything changed since yesterday. Aussie dollar yen, 4-hour RSI extension to the upside. Yeah, so we're extended on the 4. We're anticipating a market structure high, low, high, low. It's a bit difficult to pick market structure on this, isn't it? Because it's an intervention move. But we're expecting, obviously, continuation to the downside. However, it doesn't seem to be happening very quickly. And also, the thing that's worrying me about this is it's not the normal intervention post move that we get. We tend to get accumulation after it. This isn't accumulation. This is rallying against the yen. So your 4-hour RSI extensions at the moment are Aussie yen, Swiss yen. It's just done a reversal alert. Look, literally, we just closed that intervention loop. So this might be a good sell spot. I'm looking for an entry on the US dollar yen, and I can't find anything. There's nothing. There's no decent price action on this to get in, so I'm kind of leaving it for the minute. But euro yen also extended to the upside. We're back up in the propulsion gap caused by the intervention. And New Zealand yen, which is more than undone the second intervention move. We're coming back up into the middle of that first move. So this is where the move originated. Remember, we had that massive spike and then huge drop. We're back, pretty much back there. So all Norse. There's not much point in me looking at everything. Just realised you can't see. I changed the names of my levels on the RSI. You can't actually see them, but it now says WTF, buy the crap out of it, down there at the 10, and holy crap, sell it at 90. So I changed the names on it. But there's a little joke I was going to do, but I just realised it's behind my head. I was waiting for someone to spot it. You can't. Anyway, so there's nothing really much to do analysis-wise today, because if you have a look through where we are with most things, this week we haven't really done anything at all. So if you look at where we are in relation to the beginning of the week, which is Thursday, Wednesday, Tuesday, Monday, yeah. So it's there. That's where we started this week. That's where we are. So literally this week has been very much rotation. You can see that by my Aussie dollar CAD trades. Yeah. So shorted it, longed it, shorted it, just gone in long. Yeah. Literally we're in rotation at the moment. There's nothing moving anywhere. We're going up and down, which is nice. And the 70-30 is working beautifully at the moment, which is why I've shifted to 70-30 from the higher, slightly higher levels, because it's basically what we're doing at the minute. But there's nothing really much moved anywhere this week. As you can see, opened there. That's where we are, exactly where we started. So there's not much point in analysing much, because we're still waiting for something to happen. And at the moment, we've got very little happening at all. So pound, we had a little push, dropped on the news, pretty much back to where we started. So, you know, everything's kind of sideways at the moment. I really wish I hadn't got out that pound US dollar yesterday. Look, I took that off when the news came out, because it looked like there was a potential for the market to drop on the bearish stance that Bailey was taking yesterday. I got out of it just in case, because I was a little bit overexposed on the pound, and then it flew up. My target on this trade was that propulsion gap. So it's annoying, but that would have been a nice TP today. So yeah, as I say, we're not really going anywhere, but if there's any pairs you want to look at, shout them out and I can have a look. But don't really have an awful lot of analysis today because there's no RSIs on the hourly. They've all played out if they've gone in this week. And the 4 hourlies, it's literally all about the yen at the moment, and this weakness that we've got continuing back into it. So Euro New Zealand is a great sum up of the week. Flat as a pancake still. Hence the RSI2 strategy. Did you sway you the strategy you were testing was adding to winners? Did you say that you were, yeah. Well, it scales in. So what it does, this is a variation on the strategy that I'm testing. So it uses it gets into the swings, basically. Let me just do it in visual mode. So it gets into the swings very slowly with multiple positions. So we wait for an RSI. So right, so there's an RSI extension on the daily. You can't see it because I haven't got it on there, but that's an RSI extension on the daily. So it takes a trade, and then every candle it takes a trade. Yeah. So the idea behind, if you look at RSI2, when you get, because it's so jerky, RSI2. Yeah, it's like that all the time, isn't it? Because you literally measuring 2 days worth of movement. So when you get the extension, the idea is either it will retrace and then carry on, or it will just carry on. So on a daily candlestick, it will go like that. That'll be your RSI2 extension, and then you'll get a pullback and a continuation a lot of the time. So the idea is you're getting in here, and every 4 hours, you add size. Yep. So if it goes against you, you add size. If it goes your direction, you add size. And you close it at the end of the day, every day. Yeah. So there's only 6 candlesticks. So it's a 6 candlestick pattern. Yeah. So I get in. That will either then close in profit or it won't. If it doesn't, we'll scale in and wait for a down candle to get out, or we will stop out. Because it's a stop loss strategy. It does use a stop loss. You can not use a stop loss with it, and I have done that, and it does work incredibly well. However, it does take some drawdown. It's not the sort of thing you really want to be doing. Too scary. And as you can see by the profit curve, yeah, there are a lot of opportunities to make money that you don't take because I'm closing end of day. So you could set targets to get out during the day, but that's all it's doing. So basically, a good example. There you go. So there's one there. So we got in, yeah, didn't go anywhere. So we got in again, didn't go anywhere. So we got in again, we went down, we got in again, we went up, we added, didn't manage to get any further movement, and it pulled back at the end of the day and we closed it. And it jumped. There's one there. There you go. So we got in, added, got out. Yeah. So because I'm trading 4-hour candlesticks, the maximum number of trades that I can really get into is 6. Yeah. 4, 8, 12, 4, 8, 12, 24 hours in a day. So it can only ever take 6 trades a day. Either it gets in and it's a bull day, thank you, or it gets in and it's a bear day, oh dear, or it gets in and it's kind of one of those and you don't get much out of it. If, however, it drops for 2 more days, you can take more trades. It will take 6 trades a day. So I've set a limit of 10 trades. So I'm saying, right, day 1, if it doesn't work out, let's scale into day 2. But if it goes too far on day 2, let's start shutting some of day 1 out. And then on day 3, this is a great example, actually. So day 1 in 6 trades. End of day, we were not in profit. So we sit there. We sit in drawdown that day. Day 2, we start, we add, we add 1, 2, 3, 4, 5, 6. We add, yeah. Are we in profit? No. We're 2 days worth of drawdown. Yeah. Day 3, we add. We're in profit. We exit. But all of these trades here, you can see it's scaling out of these as well. Yeah. So it scales out of the trades with a stop. It's just a normal stop loss. But the stop loss is placed around about 1.5 ADR. So we're saying if we get in and it doesn't go bull, but it doesn't go ADR against us, hang on. Because we know that 58% of the time the market spends within ADR. So there is a 58% of the chance we won't get stopped out on day 1. On day 2, it has to move 1.5 ADR against us. So we have to have a down day followed by a down day, neither of them hitting ADR. And if that happens, we're still in. We wait for day 3. And if after day 3, it's continued to drop, you take losses. And that on your P&L is where you see these. Yeah. So these are 3 down day drops. Take a loss. It's wrong, isn't it? It's measuring relative strength. Relative strength can continue for many, many days. We know that. Yeah. But if you look at the overall P&L profit curve, beautiful. But you're gonna, like everything, you're gonna get stagnation. Yeah. We had a 3 down day followed by a period of not an awful lot of profit, little bit of loss, little bit of profit, little bit of profit, another bit of loss, little bit of profit. There we got back to profitability. Yeah. Tough. What do you reckon that was? Trend. Yeah. This is an intraday scalping strategy, mean reversion. The market's trending, it's going to struggle. And it does. But 80% of the time, the market is in mean reversion state, not in trend. So it makes money 80% of the time, but it will not survive these. And that is how far do you place your stop loss as to how deep those drops are in your P&L. And that's what I've been running optimizations on to find out what the best sort of stop is. But the end of day exit, there's a great one. Look, 1, 2, 3, 4, 5, 6 out. Day 1, 2, 3, 4, 5, 6. Had to take a loss on some of those because it was stopped out. Next day, 1, 2, 3, 4, 5, 6 out. That more than pays for that. So the only time it makes a loss is on a 3 down day rally. Yeah. Go and look at your charts. And look for 3 down day or 3 up day rallies in a row. Yeah, look at that. Up, down day, up, down day, up, down day, up, down day, up, down, nowhere. Down, up, up, down, up. 3 up day. You would have taken some loss on that before the down. Then a down, then an up, down, up. See what I mean? Market does not go parabolic for 3 days or more very often. 1, 2, 3, nowhere. 4, 5. That's the biggest run on that page in 1, 2, 3, 4, 5, 6 months. Once you had a run of 5 days. This is why it does what it does, because the market does not go nuts like that very often. You will get days and you will get instruments occasionally where it will have these hideous catastrophic months. Yeah. And they happen. And that is the periods where you will get that kind of movement. And sometimes you'll get, a couple of downs and it'll be like 3 or 4 months to recover it. But not all instruments do that at the same time. It's the same as every squeeze you have out there. Some squeezes will happen here, but while this is squeezing, everything else will be pottering along very nicely, thank you very much. Paying for the squeeze. Yeah. News events. You get in, you get a news event. You get out. That undoes any loss you've had. Yeah. Think of the 225 ADR moves we get where we close at the highs and put those massive propulsion gaps in. Yeah. You're in on those. You're getting out there. And if you watch it as well, there's many instances intraday you can get out on these as well. So ignore all this data, most of it's rubbish. But when it gets into a trade, you see a P&L will appear. Yeah, so there's your P&L. It's sitting there, sitting in 170, 70, whatever, $130 in profit. So if you've been sitting in this for 4 or 5 hours, 6 hours, 7 hours, and it's not going anywhere, you're unhappy with it, you can shut it if you want. It will usually get back intraday to a break-even state. But the market will always push an end, usually in an up day or a down day, won't it? It's not often we get spinning tops and OGs, that sort of stuff. Yeah, it's good. But as I said, there's 1,000 ways to do it. So that's what I'm struggling with at the moment. So that close out, but you don't have to use close of end a day. You could use close on opposite signal. You could use TP. You could use anything. There's 1,000 ways to get out of a trade. So the ones that I'm using, these are the exit strategies that I'm testing. So exit on a moving average trailing stop, exit using a stop loss based on ADR, which is a trailing ADR stop, exit at percentage of account balance, exit at a monetary amount, exit after amount of time passes, exit when the opposite signal is triggered, so RSI2 entry, RSI2 exit, and exit end of day. So those are all the exit strategies. There's loads of them. I'm testing all of them. But exit end of day. So Larry Connor's version of this was exit opposite signal. Yeah. So he would get in on S&P 500. He would get in every day until the RSI extended to the upside. Then he would get out, and that would either be a profitable trade or it would be an unprofitable trade. Doesn't matter. He gets out at the opposite end. I've never really understood that, because a lot of the time in the S&P 500, when it gets to RSI2 extended to the upside, it carries on going because it's a trend piece, isn't it? So I've actually found that in Forex specifically, exit end of day is much more profitable than exit opposite signal. But again, exit opposite signal also works. It's one of those strategies where it's almost like flipping a coin. You can, and also the next thing I'm about to test as well is the 95 level. Yeah, so you can see the 90 level here. So you got an entry there, you got an entry there, marginal. You got an entry there, you got an entry there, you got an entry there. There's one there, there's entries there. That's it on the chart. So you'd have had a short there, which would have actually been profitable because it was a gap down day, but ignore that one. You'd have had a short there, which you would have taken losses on. You would have got out with a profit on that, and then it closed below. So you'd have had some loss there and then a profit. That one there was an entry, exit. That one there was an entry, exit. That one there was an entry, exit. That one there was an entry. You probably would have taken a little bit of loss before the exit, and that you would have still been in it from there probably over those 4 days. So that's the 90 level. When you suddenly introduce the 95, you get in there, you get in there, and you get in there. So it reduces the number of trades by 50%, but the strike rate goes up to 80% odd plus. But it's very, you're not going to get many trades. Look at that entry there. There's one there. There's one there. That would have been a tiny profit. There's one there. You got one there. So that would have been a 1 down day exit. That would have been a break even, probably, depending how much size you got into there. And you got one now, or one here rather. Not now, is it? But you got one there. Yeah. And then you got an entry there. moving average is not a trend strategy. It's a mean reversion strategy. Holy crap, that's been pushing hard. Get out. That's it. Super, 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 super fast. And it's a beautiful strategy because it works on the daily time frame. So you only have to check the charts. Well, you don't even, if you've got an EA like I've got, you don't need to do it. But you only need to literally check the charts once a day. So you can do this with the Position Trader EA. So if you set the Position Trader EA up to basically use the RSI2, yeah, and stick it on the 5-minute time frame and get it to trade sort of in the morning, yeah, let it get in to the entry, yeah, and then just before you go to bed, if it's in profit, shut it. If it's not in profit, leave it. So the Position Trader EA does it automatically. It's just, it won't automatically get you out on end of day exits. So all you've got to do literally is put the EA on a VPS, set it up on RSI2 using the daily, and then put it on a 5-minute chart or a 15-minute chart or an hourly chart, whatever you want to put it on to trigger the entry when the MA cross happens. And then literally every evening before you go to bed, open up your terminal, bank everything in profit, go to bed. Then stay in bed all day if you want to, but get out of bed the next evening to go and press the close button again. That's it. It's that simple. And this will automate the whole thing for you. It will scale in. But it won't scale into the ads for you. It will only scale into losses. So it won't get into as many positions, basically. But that's not a problem because you just up the risk. This is running very low risk, what I'm testing at the moment. And number of trades as well entered makes a difference. So open sesame. So yeah, number of trades entered. So this column here is max trades. Yeah. So maximum number of trades entered. You see the difference in profitability, 27, 25, 24, 24 and a half. But the 8s to 10s are only going to happen on 2 to 3 day pushes. The vast majority of them are going to be lower. So letting it have more trades makes more money. If you have less entries, it makes less money, but the drawdown is not any different. Yeah. So all that's happening is we're scaling in, and those days that work out, we get big wins. On the days that don't work out, we get the same amount of losses virtually because we're stopping out regularly. But the bigger wins outweigh the losses because the strike rate is so high. But you know, the wins are also quite minimal. Yeah. So, you know, if something moves up 10 pips from yesterday's close, you take 10 pips. If you've got 6 positions on it, that's what you get. So it's a very much of a slow burn strategy. You are not buying a Lambo with this, but 27 grand. I mean, you're not going to take that. You take something in the middle here, something like 15K or 10K over 4 years. So it's 2.5 grand a year per instrument. It's easily got the opportunity to make 100 grand. And this is risking virtually nothing. Tiny, tiny risk. Look at the drawdown on this. Right? To generate 27K, we took 4% of drawdown. I'm happy to take more than 4% of drawdown. So if I'm happy to take 10% of drawdown per instrument, I'll take 60K. Yeah. So this is very, very, very conservative. Like conservative beyond like, what's the point? Conservative. Like 3% drawdown is absolutely nothing. It's equivalent to losing 3 trades a year. Not interested. I want to lose more than that. Trades. But look how many trades it takes. A couple of thousand trades a year. So the only thing you've got to worry about is commission. Because swaps, you're not holding anything for more than 3 days. Swaps are irrelevant. Swaps don't even come into the equation. If you can get in and out by Wednesday, you're not even paying the overnight double swaps, are you? So even better. You could put an end of week exit as well. You know, so hold everything until end of week. You know, look at it on the weekly time frame. I haven't tested it on the weekly. Whether to an RSI2 on the weekly would be good. Again, there's another option to test, but really nice. But you'll find it very, very similar to a Bollinger Band entry strategy in the fact that you're trading extreme moves, aren't you? But with Bollinger Bands, it can take so long to get out those levels, and they're not based on the same thing. So, but it's still in progress. I'm still deciding what the best way to use it is. I'm looking for something basically to replace my S&P strategy, because I haven't traded it for years now. And it's my kind of pension fund strategy, and it's sitting dormant because I'm too scared to get in the S&P at the moment. I don't trust it. I don't think we're back in a bull market yet on the S&P properly. And I'm loath to turn on my S&P pullback strategy with the market reversal alert CA, because I don't think it's there yet. And obviously when we've got quiet times like this, where the market is just sitting around doing nothing like this for days and days and days and days and days on end, there is no RSI extensions. There is no entry opportunities. However, on an RSI 2, you'd have been in and out, in and out, in and out, possibly. I don't know. But, you're in and out, in and out. So it's got a lot more opportunity to make money quicker. So not scalping if on the daily. Well, you're scalping in the fact that you are out every day, yeah. So scalping is anything that is intraday trading is scalping, yeah. Swing trading is trading swings, but you typically are trading multiple days. Position trading is multiple days. Scalping, you're in and out the same day. So that's basically what that does. It gets you in when RSI 2 is extended on the daily. If the day ends in profit, you're out. So you're scalping, aren't you? And if you have a big move intraday, where you look at it and go, it's stupid not to take that. So let's say, for example, you get in on an RSI 2 extension and you get an ADR hit to the upside. What happens when we get ADR hits to the upside quite often? Pulls back. So if you get an ADR hit to the upside and you notice it, take the money. Don't let it pull back. Get out. Will it be usable on small accounts? Of course it will, yeah. You just adjust your risk as to the account size, don't you? But I mean, the test that I've just shown you there, I've tested it on 10K, I've tested it on 50K, and I've tested it on 100K. But obviously the drawdown depends on the amount of risk. So I'm risking $100 a trade. On 10K accounts, it's absolutely fine with $100 a trade because it never takes more than $6,000 drawdown. If you have a 100K account, you can up that risk to 200, 300, 400 per trade. It's all risk is relative to your amount that you're risking, isn't it? So if you've got a small account, you drop the risk. Stop losses can be set at anything, David. I've tested everything. But this is the 4-hour version of the strategy. The daily version of the strategy is just, this is what I mean. I tested it on the daily, right, on all instruments, and get phenomenal results. 17,600 system parameter permutations out of 19,000, virtually all of them are profitable. Yeah, it doesn't matter whether you take 1 trade, 7 trades, whether you close end a day or not. It doesn't matter whether you're using moving average trailer or not. It doesn't matter which one you use. It doesn't matter whether you exit when the trades are in money or not. It doesn't matter if you exit with its opposite position or not. It doesn't matter if you put your stop loss 2.5, 1.5, 1 or half an ADR apart, or use a trailing stop of the 20, 50 or 100 moving average. They all make money because when it hits that, it bounces. So if you use half an ADR, you'll get stopped out more than if you use 1.5 ADR. But also, you will take less loss than that, which means that the winners don't have to be as big. Doesn't matter. It really doesn't matter. Look at this. This uses a 2.5 ADR stop and makes $6,000. This uses a 1 ADR stop and makes $5,000. This uses a 2.5 ADR stop, makes $5,000. That uses a 3 ADR stop, makes $6,000. It doesn't matter. The stop loss is virtually irrelevant because by the time that thing's gone down and hit an RSI 2, it's ready to go back. Personally, I prefer a half ADR stop. I'd rather keep the losses really small. if I'm using multiple entries. If you're using one entry, and again, you can do testing, and just say, just want to get in once. If you get in with one entry, yeah, there's $1,700 profit, 1,200, 15, 3 grand, 1,800, 4 grand, 3 grand. Everything's making profit, but the drawdown is also a lot smaller because you've only got one trade that's ever going to hit a stop loss, isn't it? More trades you have, the more chances of stopping out, the more loss. This is why stop loss strategies struggle, because you're basically placing an order in the market to say, take my money. And the market will take your money, obviously. But, yeah. So it'll be a new EA. No, well, I might use a new EA just for me for automation, but you can do this with a position trader EA. Doesn't need to use. It's just an RSI. It's simple. You can trade this manually. Literally, you could get up in the morning, right? Whatever time you get up in the morning, open up your charts, scan through everything. Anything extended beyond RSI 2, that one is, sell it. Anyone extended, sell it. Right? Shut the laptop, go to work, come home in the evening, just before you go to bed, open the laptop. Anything in profit? Yeah. Bank it, bank it, bank it, bank it. I'll leave that for tomorrow. Bank it, bank it. Wake up in the morning, anything you left for tomorrow, you add. Yeah. Anything that is new, RSI 2 extension, you enter. Shut the laptop, go to work, come back in the evening. Twice a day for 10 minutes. I think that's why Larry Connors loved it, because you don't have to do anything, do you? It's trading without trading, isn't it, really? Think about it. You really are doing very little work. Very little. But yeah. But it needs a lot more it needs a lot more testing, and I need some robustness, test it more. How was the movie? Didn't actually get to see Civil War in the end. What I actually saw was what did we see? It was that crap. No, it wasn't that crap. My God, what did we go and see? What's on at the cinema at the moment? It wasn't Civil War. The reason it wasn't Civil War, because Civil War's a 15 and I've got a 14-year-old, which we don't have a problem with him watching 15. It's just you get ID'd sometime in the cinema. But anyway, so we didn't watch that. We watched cinema listings. We didn't watch that. The Fall Guy. That's what we watched. The Fall Guy. Which was actually pretty good. But it wasn't as good as Civil War. But yeah, we watched that. And it is quite good, actually. But it was... the stunts are amazing, obviously, because it's a film about stunts. But if you've watched the original Fall Guy, it's very different. Anyway. Here's your typical dad that shows up to the movies and goes to sleep. No, I didn't go to sleep. But yeah. Is it a bit silly? It's very silly. It's got Ryan Gosling in it. So, somebody asked a question about Euro US dollar. Which I can't find. So yeah, I mean, it's gone nowhere. I've had 2 shorts on this this last week. I'm struggling to realize. I can't remember why I took that short at all. But I did. Anyway, so yeah, there's an H1M5 mean reversion entry from there. So at the moment, it's nothing. It's just we're just waiting for some movement, basically. But this is more likely bearish than bullish at the moment, because obviously the euro are dropping their rates next month, as long as CPI data comes out on target, which it should do. So we just had a reverse alert there. So that's a double top or triple top at the highs there. So worst case scenario, push down into propulsion from there. So looking to come back down into this area here. But But bearish overall. I'm out of it though at the moment. That entry there. But we'll wait and see what happens with the CPI numbers for the euro, which will potentially, hopefully, still come out bearish. But how are you breaking risk into multiple trades? So just pick an amount of money to risk on each trade. How brave are you? You basically, I'm just using the approach of risking X per trade. So I've tested it risking 100, 200, 500, and I've tested it using 50. The only difference is the amount of money made. That's it. The drawdown is bigger if you use higher risk. Yeah. So when you do get a losing run, it's bigger. You lose more. That's literally it. You don't know how many trades it would take if you're trading every 4 hours. But if you're trading every day, it takes one trade a day. So if you put a 1.5 stop ADR stop on something, you're going to lose 1.5 ADR. So if you risk $500 over 1.5 ADR and it goes against you for 3 days, you've got a possibility of losing $1,000. If it goes your way, you make whatever. And this is the thing. The whatever is very much whatever, isn't it? Look, let's say that was an RSI 2 down day. That was your entry. That's your exit. But that is the end of day. Oh, no, sorry. That's the end of day exit there. So, but if you don't take the end of day exit and use a moving average trailing stop exit, you'd have got out somewhere up there. The difference between that and that isn't a lot. It's so much nicer getting out every day with just a little bank of money. It's just lovely. Nice way to trade, just banking stuff every day, which is what we do in position trading, isn't it? We're constantly just banking cash when things are moving the right way, obviously. But you're just banking. Why does it keep resetting itself? You just keep banking every day. And that's what it will do as well. It will just keep consistently banking every single day. If there's money, it takes it. If there's not money, it doesn't take it. Very, 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 very simple, which is why it works, because the simple strategies work, don't they? More complicated moving parts you got, the more impossible it is for a backtest to be probable to happen in the future. Yeah, we're using a very, very simple indicator that measures movement within a range. Yeah, and all we're saying is if it's gone down hard, get in. If it goes up, get out. If it goes down harder, just get me out with a bit of loss, please. Hard to backtest with a position trader, EA. It's not actually that hard to test with a position trader, EA, because what you would do, that version of it is, don't forget, this is something I've just come up with out of the blue. I made it up. This isn't a strategy anybody else has come up with. I just made this up. I just basically said to my EA, get me in every time. So the original strategy was on the day. So with a position trader EA, all you do is you use RSI 2. But let's test it. Let's do it in the tester. Let's do it in the tester. Where is it? Right, so buttons have disappeared. So we are going to use RSI mean reversion strategy. Our risk is going to be a percent, go 1% over ADR. Now you can't test exiting at end of day, obviously, because it doesn't do that. But we can use a lot multiplier for add-ons is going to be 1. Distance between trades, let's say 1/4 of an ADR. Single target for trades, we'll go with 1/2 an ADR. Multi-trade position, we'll go with 1/2 an ADR. So we're just looking for a little bit of money. And drawdown control, we set to true. percentage of account. So if we're risking 1% over 1 ADR, if we want to go with 1.5%, that is 1.5 ADR. And we will go, in fact, I'm going to go 0.5 ADR. I'm going to close it all out. RSI mean reversions, we use RSI 2, close on the daily, using 90 and 10. And our entry signal will be EMA close. I'm going to use a 5 SMA because I'm going to do this on the hedging. I don't want hedging. I'm going to do this on the hourly chart. So okay, so there's an entry, second entry, so it's scaling out and exited there. So you had an entry there, you had an entry there, you had an entry there. That took a loss there, half an ADR. That took a loss there, half an ADR or 0.5%. And then it's exited there with 0.5%. Yeah, you need this to use 1%, really, don't you? Yeah, it might be a bit difficult to actually test. See what happens. No, it's making money. Let it run. Stagnating a bit there. It's up 2.5 grand though, using 1% risk. Yeah, so there you go. Look, so that's the RSI 2 entry. So where you would get in on this day as an RSI 2 entry, you'd actually get in there because you get in every day. The position trader EA has potential actually to do this a little bit better because it's using relative strength. It's using strength, isn't it? But it's obviously going to trade it in a different way, but it's using the same RSIs. There's multiple entries there. Look. There we go. It's up 4K odd. Where did we start? So this is a 50K test. So it's up just over 10% so far. Stagnating a little bit. But this is taking 1% targets, isn't it? So those days where we're moving around like this, it's not making money. Whereas if you're in profit at the end of the day, you can close it out and make money. So it's kind of, you'd have to do it on a semi-manual mode, really. But again, you can optimize these settings. You know, I'm just picked all of this at random. I've no idea whether this is anywhere near the best way to do it using a moving average cross, because this is basically what it's doing. It's waiting for strength, isn't it? Which is not what we're doing, what the RSI 2 strategy does. There you go. It's up 7-ish now. So we're up 15%. This could be much more optimized. I can see there's so much money left on the table. Intraday, there's so much money left on the table on a lot of these trades. That's about right. That's about right. Yeah, see, look, the exit on that one there was there. Whereas the end of day exit that would have been taken was there, which was double the amount. That exited there. The end of day exit was there, almost double the amount. So I think if you use the position trader EA just to get you into the stuff and then got out of the stuff manually, you'll end up making a lot more money. There we go. We're up nearly 10, so we're up nearly 20% now. You know, this is just a set file I've thrown together, literally. Just while we're on, I've just thrown this set file together, literally just using the RSI2. All I've done is I've used the RSI2 and gone, right, stop me out. If it's wrong, get me out at some money. End of day or end of next day. So it's end of day if it's in profit. Or if it's not in profit, it's end of the next day. Yeah. So we get out, we're basically when we're in profit. So the EA that I've built, the end of day exit, there's two ways it works. Larry Williams came up with the end of, there's so many Larrys in trading, isn't there? Larry Williams came up with the end of day exit strategy. And again, it's a day trading strategy from the stock markets. And basically it was a case of you get in with your strategy, regardless of whether it's in profit or loss, you get out at the end of the day. Yeah, no overnight swaps. They're too expensive in futures. We can't do that. So we get out at the end of the day, regardless of what the P&L says. Adapt that to only get out if the P&L is in profit. And what it will do is it will hold until the next day and give you an opportunity to take another entry the next day and then get out in profit, because we're already extended on the RSI2 there. So the likelihood is we're going to get a bounce day at some point. My point is you will get intraday bounces. Now, intraday bounces are much more difficult to close because you need to decide yourself when you close them. There's no rule that says it's better to wait until X time or X amount of money. You just pick some money and you take the money. Yes, you could have got out early. You could have got out at the right time. You don't know, do you? But the fact of the matter is when that RSI2 gets extended, you usually get an intraday bounce following it at some point, like this one. RSI2 is at 91. We enter, it's bouncing because we've had 2 up days following by a down day. So right now that got out there. Let's see where this one closes. Okay, so this day closed here. You missed half the profit. Again, you missed half of it. So this is not working as well as it should be, and it's crushing it. We're up to 60, nearly 62k now on a 50k account. 50. It's great, but it's such a. But the reason it's great, you know, and you know how much I hate stop loss strategies, but this is a stop loss strategy with a high strike rate. The reason strategies with stop losses fail is because you'll never find one with a high enough strike rate to make them profitable. Mean reversion strategies typically have a risk reward ratio of somewhere in the region of 1.2 to 1.5. Anything with a higher risk reward ratio than 1.5 on mean reversion, it will fail because you're not trying to get into big moves. You're trying to get into reversions, and reversions most of the time are pullbacks on legs in the same direction. So it's a high risk trade. Therefore, you get out fast. And that's basically exactly what this strategy does. Tried to get in there, didn't work. So it got out. It tried to get in again, didn't work, got out. Tried to get in there, got in, and it got out. Got in again there, and it got out. But look at the moves it's taking. These little mean reversion moves. Get out at the end of the day. Yeah, if you've got money, take it. Doesn't matter how small it is because the strike rate is big. I don't know what the strike rate is. Right, so this is taking 2 trades or multiple trades, obviously. And again, I just picked a quarter of an ADR out of the air. Try 0.1 ADR, you know, and try it on the 5-minute time frame. That will probably give you more realistic to what I've tested. But your strike rate on it is 67%. And that is using losing trades as well. Don't forget, if we're taking 2 trades, one is a winner, one is a loser, that strike rate is actually a win overall, but it will be worse. This 67.5% is worse than the actual strike rate, because some of these that are logged as losers, yeah, so that trade is a winning trade. It made money. However, it will log a loser and a winner. Yeah. So if you have 3 trades and it overall makes money, you could have 2 losers in there and 1 winner, and it will log it as a 33% strike rate. It's not. It's 100% strike rate, and it's a winning trade. So you can't really take that strike rate as it is, because there's multiple positions in there. But 314 trades generated 14K. And this is very similar to the sorts of results that I'm getting. That's only using 1% risk, and it made a 4.75% drawdown on the account. So that's all it did. It drew down by $2,600 to make 13. That's nothing. I think I've been in $2,600 this week on 6 trades. Yeah. I could easily 5x that and then 5x that. All we're doing is we're using elastic band theory. It's the same thing as I teach in the bootcamp. It's elastic band theory. It's just we're doing it like that, not waiting. We're not swinging. We're scalping. Elastic band movement. So very similar to ADR reversals. But it's the moves that we're getting into are multi-day moves usually. So it's where you'd have an ADR that wouldn't necessarily give you an RSI2 reading, but the next day. So it's kind of like you could use ADR. So when you get an ADR hit, yeah, your next day you wait and see if you get a bull day. If you get a bull day a day after an ADR, short it. That's equivalent to an RSI2 entry. Similar. It's all the same stuff. Again, everything you see is the same stuff. You can equate it to something else, giving you exactly the same reading, exactly the same condition, exactly the same entry. There you go. That's a set file I've just banged together in the live room here without even thinking about it. And it's just generated a very nice, healthy profit curve. Not amazing. It hasn't lost money, and it uses a stop loss. Weird. There you go. So that's how you do it. But obviously, there's the EA that I have built is a test EA to test different exit criteria. Yeah. So the difference between what I'm testing and what this is testing is very different and very more malleable and configurable. But at the end of the day, I'm coming to very much the same conclusion as I come to in here every day. When I look at my P&L, I go, hey, that's in profit. I'll put it down there. And it's the same thing. If you've got into multiple trades and all of a sudden you see a profit, bank it. Simple as that. It seems like this would work on a funded too. Yeah, you could use it on a funded account. However, you will get periods of drawdown where it won't work. It will blow the account. This strategy, all strategies with a stop loss will have a failure rate. Yeah. So those days I just showed you. So if you were trading on a funded account or a proper account there, I just assume the RSI2 triggered there. Yeah. Losing, win. So if you didn't hit your daily or overall drawdown limit during that month, this is an entire month, fine. But you certainly didn't have a winning month. Likelihood is you blew the account. Yeah. I didn't, because I don't have stupid limits where I can't have losing streaks. But, you know, it's just, like I say, the problem with prop is geared up to lose. Yeah, their job is to make you not successful, not to find winning successful traders to share our money with and take a percentage of. Yeah, that's not how it works, is it? It's about basically rigging it so that you buy as many demo accounts as possible from them. But there are ways to beat the system, but you have to understand that the system is rigged to fail for you. So there will never be a strategy out there that does not have a losing streak that will not blow an account. If you can find something with a high enough strike rate and take high enough risk, you can win. So I don't know what the winning streak, losing streak was on that test, but so consecutive wins 4, consecutive losses 2. Yeah. Consecutive losses in money, 2,075. Consecutive wins in money, 2,283. So that risk that I used at 1% there, if you up that risk to 2%, stage 1 pass, lucky stage 2 pass, lucky funded withdrawal. Before you hit that, you can do that. But it's not down to you, the strategy, or anything but the market. If you get in on this day, you'll probably have a lovely month. If you got in on this day, you'll probably have a terrible month. Yeah, the difference between making money and not making money on prop is the day that you start the evaluation. Because the day you start the evaluation, your strategy is in stone, either going to match the criteria that the market is going to lay out, or it's not. You don't have a control over that, which is why I used to run multiple funded accounts starting at different times of the week, because the same strategy will give completely different results depending on whether you started it on Monday, Wednesday, or Friday. Because if the Monday one worked beautifully, there's a good chance Tuesday will and Friday will, or Wednesday will and Friday will. If Monday didn't work, on Wednesday, you might catch a little bit of the losses, but then get the nice wins. If you started it on a Friday, you might continue the wins from Wednesday, and both of these might pass, but you will have lost Mondays. Sometimes you start Monday, Wednesday, and Friday, and all 3 of them fail because the market just goes like that and you're in a trend strategy. Or it goes like that and you're in a mean reversion strategy. But if the market does that, regardless of the strategy you're in, you're right. But whether the market does that or that isn't down to your strategy. It's down to the market, which is why prop fails. Because they know the market does not do the same thing. We had a beautiful trend for a month. And then we went into a range for 4 months. So the trend traders went stage 1, pass. Stage 2, pass. Funded account. In a bit of drawdown. I'll tell you what, we'll switch to a mean reversion strategy just as it trends for 2 weeks. Pop. But they passed on that and they wonder why they failed their account when they got it funded. The market's nothing like it was when you were trading it here. Why it doesn't work? Because they know that the market never has the same state for multiple months on end. Therefore, if they can get you to string out 2 evaluations during a market period where you've got a strategy that happens to take advantage of it, chances of it carrying on are very, very small. They know that. But we can sustain it because we don't need to have drawdown limits, do we? David, I've just seen you tipped me again with another $5. Thank you very much. Just because you're you. Oh, that's nice. Thank you very much. What should I buy with David's $10 this weekend? I'm going on a bike ride on Sunday, so probably a spare inner tube. Thank you for that, David. Much appreciated. It is always using a RSI 2 on a daily candle as the signal. Yeah. Can I put that file in Discord? Yeah. Pos RSI 2. I'll get. Just wait, hang on. stick it on my desktop so I don't forget. I'll stick it in there in a minute. Actually, what I'll do is I'll stick it there in a minute. I'll do it in a minute. From an intraday perspective, how do you deal with flipping your bias? There is no bias. It's a mean reversion strategy. Herc, if you're still using biases, that's why you're failing. Yeah. I've proven it time and time again, using a bias in trading. It depends what your bias is. If you're using bias based on fundamentals, fine. If you're using biases based on moving averages, you're never, ever, ever going to make money. Because by the time you've identified there's a bias, you've missed it. The move started there. By the time the moving average crossed, you'd missed that much. By the time you'd waited for the market to push down and give you confirmation by pulling back that you're in a trend, you've missed that much. So if you're lucky and it doesn't immediately mean revert, you might catch that. But in a trend, you need at least a 3 to 5 R ratio because the strike rate is about 30%. Can't make money doing it. Prove me wrong. No one's ever shown me a trend trading strategy that works. Doesn't work. Not with the moving averages anyway. But it's a mean reversion. Mean reversion does not have a bias. Mean reversion is mean reversion. You are reverting to the mean of a move. It's Fibonacci. 50%, 30%, 60% retracements on moves. Yeah, if something's pushed up for 2 days, you're trading the reversion to the mean. Doesn't matter whether the market's been going up or down. Would you have taken that short? If not, why not? Look at it. Beautiful trade. Just because it had gone up, exactly why you should be getting short. You don't buy stuff that's going up. You sell stuff that's going up. Because after it's gone up, they have to take profit. Ice creams. Good idea, Steve. I should buy ice creams. Might need them this weekend. It's going to be warm. Am I still using prop? No. Gave up on prop. It was a way for me to free up capital, but it's not sustainable. As we know, if you can sustain profit out of prop, chances are your prop firm is going to go bust because their rules are too lax. Using 20 minutes. Is there? 3 o'clock. There is. But I have got to go and see my mum because it's her birthday. So can't actually hang around too long. Unfortunately. Have you built any systems around volume? Nope. Again, Herc. If you're trading Forex or you're trading CFDs, none of that is usable because there is no volume. What you see on your chart here is not your volume from the market. It's volume from your broker. Your broker will vary. So the volume that you see here on my chart, on your chart, is different. So if you develop a strategy using this and then you switch brokers, start again. There is no centralized volume in CFDs in Forex. You can use TPO. We've had this conversation multiple times recently. You can use TPO profile, time and price, but all that is support and resistance. And you can just pick that by drawing lines on the chart anyway. So happy birthday, Lee's mum. I shall play her the video recording. So yeah, you can't use volume profile. You can if you want to, but I mean you'll find it as useless as everything else in trading. It's all volume profile is a go and watch yesterday's stream. I went through this in detail. Yes, was it yesterday? But all volume profile is showing you that at that point there was a load of orders. Yeah. After the orders came a propulsion move. This indicator draws all the propulsion moves on the chart. And the propulsion moves are the market moving away from previous areas of support and resistance. So this big blue area here is an accumulation that is broken away from. So that will be a massive volume profile bulge. These blue lines are exactly the same thing. Like I said, everything you see in trading is the same. Somebody that gives you a supply and demand indicator will draw a big box there. I've got a line. Who says it's going to come out of the box, the line, or go beyond the line before it turns? 50-50 on every single one of those. No one knows where it's going. Depends how much volume in the banks there is on that particular candlestick that approaches that area. Nothing to do with you at all, with anything. All random. Steve, 10. Thank you, Steve. €10 towards birthday cake or flowers. Funnily enough, I have bought some flowers. Thank you for that. I'll turn up to my mum this afternoon and I go, there you go, mum, these are from Steve. And see what she says. That's a great idea. Thank you, Steve. That's much appreciated. I'll have to tip some into it, though, because they were more than 10 quid. But anyway, thank you for that. It's much appreciated. I'm going to do that. These are from Steve. You know what? My mum still doesn't know what I do. So I can't go down the route of trying to explain, who's Steve? He's the guy in the stream that I do every day. What's a stream? It's on YouTube. Is that like the television? Yeah, it's like the television, but it's got an unlimited number of channels and more videos than you could watch in your entire lifetime. Do they do video recorders for it? That's the conversation. I can tell you that is the exact conversation I will have. Sorry, I think you missed my question. Is it above the second kind? Oh, it's above the second donation from... Sorry, yes, I did. In your experience, what are usually the best months for mean reversion? The months that it works in. There's no answer to that question. Everything in trading is random. Yeah. Every candlestick on the chart that you can see here has never appeared. Ever. Yeah. If you took a screenshot of this now and gave this to an AI and said, find me this exact candlestick pattern at any time in the past and go back 100 years if you want, it will come back and go, sorry, there is no matching results. Yeah. Every system or strategy ever developed or backtested using any EA is using history that is never going to repeat itself. So even if I could say to you, which are the best months for mean reversion, I have no idea what the future holds. Yeah. So I could say over the last 10 years, 3 out of 10 times, March has been terrible. This March could be the best month ever. I could say that 7 out of 10 months in July, beginning of the summer holidays or August, 7 out of 10 of them have been terrible because the market hasn't gone anywhere. They could go into a massive trend for the whole of July and August this year. None of that helps you in any way, shape or form because every time you press the buy and sell button, there is a 50-50 chance that the market will either move in your direction or against you. I took a trade there and it went up and I took it off. I took a trade there and it went down and I took it off. If I'd have taken that trade and it had gone up, I would have dealt with it by adding another trade and getting out later. But whether or not I took that trade because of something that's happened in the past X number of times, it's got nothing to do with the next time I press that button. I got into the pound New Zealand, last week. It's gone down since I got in. I'm still in it. Now, my strategy told me there's a high probability of that going up. It didn't. So I deal with it. But it doesn't matter what you do. I've done analysis on the DAX to the degree of exporting every hour of every candlestick over a decade to try and find a repeatable pattern in the DAX that happens enough to get an edge out of it. There isn't one. Yeah. The only thing I do know with the DAX is that at 8 a.m. every day it goes mad. The volume goes 10x what it normally does because the market opens. That's the only repeatable pattern in the DAX. Whether the candle goes up, down, or whether it moves beyond 1 ADR, half an ADR, or a quarter an ADR at that opening bell is random every day. So the only thing that you have in your arsenal as a trader to make money is risk and reward. That's it. Because you do not have the ability to time when the market is going to move in a different direction, the only thing you can do is press the button, hold on, and wait for the market to move either up or down. If it moves in the direction you want, you take the money and you put it in your bank. If it moves against you, you change your price to a different level by adding a second position and moving the price you entered at up. That only works in mean reversion strategies. Whether the market is in mean reversion depends on whether or not the fundamentals are driving that market parabolic in one direction or not. You can't do that either. You can't time this. The Swiss said they weren't going to change the interest rates, and then they came out on the day and went, you know what, actually, we're going to drop them by 0.25%. You could not predict that. Yeah. The last time that Swiss announcement came out last year, you got a totally different result to this year because they didn't change the interest rate. So if I looked at history and said for the last 5 years in March, the Swiss franc hasn't done anything, this year, bloody hell, did it do something? But it's because something changed, and I can't see the future. So you can't use any of that information. So there's companies out there that will give you trends based on time of year and seasonal analysis and all this sort of stuff. Some of it does work, but it tends to work on commodities and instruments that have seasonality, crops, oil, yeah, things like that. Stock markets. Stock markets have quiet periods, usually around summer holidays. Forex market tends to contract average daily ranges during August and September. I've had Augusts where the thing's gone mental, and it's really hurt me. Yeah, and the reason it's hurt me is because what I've done is I've changed my RSI in August to a more sensitive one to try and get into more trades, expecting the market to be quiet, and went mental. So I got into really bad squeezes because I got in far too early because I was expecting it to be quiet. For some reason, it went nuts. You cannot use anything back there to give you any indication of what's happening in the future. But you have to have something. Yeah. But the difference between most traders and the way that I trade is I'm not interested in getting it right, getting the timing right. If the RSI gets extended and I get into a trade, happy days, and it works. If I get into a trade and it doesn't work, that was my original price. My price is now here. So all I've done is I've moved my price from there to there by taking additional trades in the direction that I want the market to go. Yeah. So I'm adjusting the price to suit my benefit rather than taking losses because I was wrong. I can't be right on something that hasn't happened yet. When's World War III kicking off and who's going to press the button first? You can't answer that question, neither can I. So why try and guess? You can't. Yeah, I have no idea who's going to win the next FA Cup final. Yeah, there'll be odds on it, but none of those odds will be in any way, shape or form giving you a clue as to who it's actually going to be because you can't see the future. So when you can't see the future, you can't use the past. But there are patterns that appear that you can use. There are things that happen regularly in the markets that you can use to identify where the market is heading back to. Yeah, so it's going to come down into here or it's going to go there. If it goes there first, that's fine. I'll just scale in until it goes back up to there. If it goes there first, I'll get out. And then I could possibly get in short and get back down to there. Because that's what the market does. Look at all these grey lines on the chart. All the market does is it moves from previous areas it's been to again and again and again and again. And sometimes it goes a bit further and a bit longer than we anticipated to before it comes back to it. But it always does. That's the only thing we know for sure is the market goes up and down through time. Those are the three constants of trading. The only thing you have in your control is risk. So if you split your risk, instead of getting in with 2% risk on this double bottom bounce and losing 2% of your account, if you got in with 0.25% risk there, and if it didn't work out, add another quarter, add another quarter, add another quarter, add another quarter, and go, holy crap, at some point that's going to spring back fast. And when it does, take the money. What have you lost? Nothing. You've made money. So you can adjust your risk based on whether you think a mean reversion strategy or a trend-based strategy is going to work over a period of time or a particular month of the year. You can adjust your risk, but you can't be sure whether or not that will actually happen. Trends tend to happen when fundamentals shift. You look at the Aussie New Zealand, this was caused not by a time of year or or anything but the Australians and the New Zealanders going out of sync with interest rates. So it's more beneficial to buy and hold New Zealand dollar than it was to hold Australian dollar because interest rates changed. So the Australian dollar collapsed against the New Zealand dollar. Go back and look at this particular month, which was August or September in a previous year. It mean reverted. Last year, or 2022 rather, it trended like a lunatic for 3 months. So if you went, well, for the last 3 years, we've just done like that. So I'm just going to wait and mean revert that. Unlucky, you should have been a trend trader. Useless. Doesn't help you in any way, shape or form, does it? Seasonality in FX doesn't exist because FX is not a commodity. It's not a tangible product. It's an exchange rate between two currencies. It's the differential between two currencies, and differentials change based on fundamentals. So fundamentals shifting makes the pattern of this change. The ADR, the average daily range, changes based on volatility. Volatility is caused by one being stronger or weaker than another. If they are both as strong as each other, ADR will drop, volatility will drop, the size of candlesticks will drop, the speed of movement will drop. If the Australian dollar's interest rate differential is 10 times higher than the New Zealand dollar's, that happens. The candlesticks get bigger, the average daily range of movement gets bigger, the speed, the propulsions of movement gets bigger. That is caused at random by banks' decisions. Fundamentals, unemployment rates. Why has the Canadian dollar gone ADR today? Because we've had news. Yeah. What did I say about the news? Well, that looks like a bit of an overreaction to something that's a 0.1 differential. It's tiny. Where did I say it's going to end up? Where's it off to? Because this happens all the time. There's no reason for the Canadian dollar to suddenly power up or drop because the news was just normal. So you get a knee-jerk reaction and a reaction back up there. But if that unemployment rate came out at 0.5% higher than expected or lower than expected, this thing would be off and it wouldn't stop for days or weeks. But you can't look at last year, last month, last week, or the last unemployment rate announcement to give you any clue as to what's going to happen today. Look at the pound yesterday. We had negative news on the pound. Bailey said that the pound is probably going to bring its interest rate drop forward, which is negative. Everything he said yesterday was negative. Yeah, there's the news. We went all the way back up to there, and now we're back at where the news was again. Yeah, that was all massively negative. The market should have reacted negatively. It didn't. Because that has got nothing to do with that day, which has got nothing to do with this day. I always use the three outcomes of a candlestick to explain how random the market is. Because people always say, well, we've just had a bull day. So what? What does that mean? So we open up here. What does that mean? It means yesterday there was more buyers than sellers. Yeah. So it's a buy. No, yesterday it was a buy. What's today? Indecision. Why is it indecision? Because the buyers couldn't carry on. The sellers couldn't undo it. So we ended up sitting in the middle. So what does that mean the next day is going to be? Bull or bear? Flip a coin. Happened to be a bull day. Oh, brilliant. So the next day is going to be a bull day. What's the next day going to be? Because we've had 2 bull days in a row. Well, it's definitely going to be a bull day, isn't it? It's a bear day, and it undid both of those bull days. Random. Totally random. The only reason that day is that is because there were more people selling on that day in banks and institutions than there were buying. Probably because they've been buying for 4 or 5 days on the trot, and that is a 50% retracement, which is a partial profit take on that move that they made. When that move comes, could be 3 days, 5 days, 4 days, 7 days, 9 days, could be a month. We don't know. Look at the Aussie dollar and New Zealand dollar example I showed you. Yeah. 6 or 7 days down. Good luck if you're trying to mean revert that. You're dead. Nothing to do with anything, is it? It's all random. Everything is random. You have one thing in your control, and that's risk. And if you try and risk a high percentage of your account every time you press the button, you will be wrong more than you're right, which means you will lose money. If you use a small amount of risk, and if you get it wrong, change the price that you got in at, you've got a much higher probability of getting it right, haven't you? Because I can be wrong 6 or 7 times before the market moves in my direction, and then I'm right. So I can be wrong 6 times, lose no money, and get out and be right. That's what banks do. Why people are told to put stop losses in the market and lose half their money, I have no idea, but they do it. Because everybody's looking to make £1 million, aren't they? But that answers your question, hopefully. You don't all have to cough up towards my mum. How have you seen trading change since I've started? God, it feels like I'm on a podcast. And I've got news in 1 minute. Just watch the Euro US. Michigan numbers just about to come out. 20 seconds. How have I seen trading change since I started, and do you think the dynamic of trading will be completely different in the future? No idea. Nothing's changed since I started trading. I started trading in the 16 odd years ago, the noughties. That's Michigan just gone in. Just volume. Yeah, nothing's changed. Price goes up, price goes down, and it moves through time. Up is based on more buyers than sellers. Down is based on more sellers than buyers. That's it. There's 3 candlesticks. There's only 3 candlesticks in trading. Bull candles, bear candles, and indecision candles. Yeah. So that means there's more buyers in the last hour, week, month, day, year, 5 minutes, minute, tick. That means the opposite. And that means that it was pretty much an even number. Not one of those things has any bearing on the future. Because if you see a big run and then a shooting star appear at the top, everyone goes, sell it. Why? That just means that there wasn't enough buyers that hour, day, week, or month. What about this hour? It's got nothing to do with that hour. All those orders are done. All those orders are done. How many orders are here now? Not really doing anything in the news. And there's only 3 states the market can be in: bullish, bearish, or sideways. So if you have a candlestick drawn, which is a representation of price over time, the next candlestick can either be bearish, i.e. it closes below the open of the previous candle. It can be bullish, and that it closes above the open of the previous candle, or it can have a wick above and below that candle and close in the middle, meaning it's indecision, or it can have a wick below that high and a wick above that low and close in the middle, which means indecision. Indecision, indecision, more buyers, more sellers. All random, and every time a candle paints, it's a random representation of price over time that has no bearing on the future. Only thing you have is risk, and that has never changed. Back in the Japanese time when they invented all these candlesticks, it's the same thing. A candlestick was basically an order book. Nothing's different these days. It's just how many orders have there been, and what direction have the orders been in, and how much of them over that period of time. If you remove that, oh, I've just removed it. Hang on. There we go. If I remove that and then do that, you can probably tell what it is because the moving averages on the chart. But that could be a 5-minute time frame. It could be a 1-minute time frame. It could be a daily. It could be an hourly. It could be a weekly. Yeah. What time frame is that? It's a 1-minute chart. Time frame is that? Time frame is that? Doesn't matter, does it? Where's price going? Is this going to be a bull candle or a bear candle? There's a 50-50 chance. That's it. That's all you have. But nothing has changed today that I haven't, that I was doing 15 years ago. It's the same stuff. The only difference I've made over my trading career is I've tried every system, every strategy, every style of trading on every time frame, on every instrument known to man, apart from options. I've never actually gone down that route. But everything else, I've traded stocks, I've traded indices, I've traded commodities, I've traded Forex, I've traded CFDs, I've traded futures, I've traded everything. They're all the same. There's a line on a chart that tells you where the price is. The next movement, no one knows. Doesn't matter how many indicators you put on your chart, none of them are going to tell you where it's going next. They'll all tell you where it's been and how it got there. So that's all you have. So the only thing you can use historically is where did the sellers enter the market? Where are the large orders? And who is in control of the market now? Those are the only three pieces of information you really have. And every time you get to one of those pieces of information in your system or your strategy tells you that you should do something, the odds are always the same. 50 every time. Have you tried trading inside days? Inside bars, yeah. Inside bar breakouts. There's one. Just about. There's a better one. So that's an inside bar. A big candle, inside bar. Inside bar, breakout, short. It got that far, and now it's back inside the bar. Have you seen the candlestick pattern called the inside-outside bar? Yeah? So this is why inside bars fail. I'll find you one. There's one. So that candlestick there, that candlestick following it has a higher high and a lower low, and it actually closed inside of the previous day. So an inside bar will quite often break to the upside, and then following that, it will break to the downside, or it will break to the upside and the downside, and it will sit there. Why? Because it was an inside bar. What does it mean? The market hasn't gone anywhere. What's the likelihood of the next day doing the same thing? Quite high. Yeah. Sometimes you get an inside bar. Let's assume that wick's there, that breaks like that. But that was caused by a news event. It's got nothing to do with the inside bar. Totally random. The next day, there was a massive news event that caused a 200 ADR drop. The inside bar didn't cause that. The market caused that. Nothing to do with it. Every candlestick pattern you show me on a chart, I can show you an instance of it working and failing. Every time you show me a head and shoulders break, I can show you a head and shoulders fail. Every time you show me an ABC pattern, I can show you an AB fail, which is called a market reversal alert. Every time you show me a market reversal alert that works, I'll show you a market reversal alert that fails, because there's only two things that can happen, up and down. No strategy that works consistently enough to make you money. Saying that, I've just proven earlier on in this stream, the RSI2 strategy makes nothing but money constantly, which is why I use the RSI. The only indicator after 15 years of trying every oscillator on the planet, and even oscillators made from oscillators, TDI. TDI is an RSI, a moving average, a Bollinger Band, and a signal line across all of those. Yeah, it's four indicators in one. Doesn't work any better than the RSI, the moving average, or the Bollinger Band, because it's a combination of those three. Most of the indicators you buy out there are just something else repackaged in a different name. The only thing I found over the years that actually has any kind of strike rate that is useful in any way, shape, or form is the one that every person on the planet slates because it's not accurate enough. because they're doing it wrong. They just don't understand what it's telling them. They think this is an oversold, an overbought. You can't have buying and selling of something that is non-tangible. This is an FX pair. Overbought and oversold comes from stocks. This is not a stock. You can't use this in the same way as you use stocks because it doesn't operate in the same way as stocks do. RSI2 is a stock trading strategy for the S&P 500 index. Nothing else. Doesn't work on anything else. So you thought, but I just proved wrong. But, you know, it's all random. Everything's random. Inside days will work sometimes. But the problem you will have as a trader trading inside bars or inside days is that when this happens, you will get out here. The reason you will get out there and not there or there is because you can never pick the top or the bottom of the market. You can only take a portion of it. Because you've had so many stop outs in the past and your account is negative 4% this week or negative 2% this week, yeah, by the time this moves down 2 to 4%, you'll close it out and go, I made my money back. You won't hold it. Because when it gets to this area and it's 2 or 4% and you've got your money back, the next 5-minute candle that's bullish, you'll panic, you'll get out just before it collapses. And then you'll get cross because you missed it all. And then you'll take a revenge trade at twice the lot size to try and get yourself the profit that this thing owes you. But you won't, because the next trade will be a loser because you'll try and mean revert that and it will drop. Sound familiar? It's because you're using stop losses. Proved me wrong. I've proved myself wrong in this quarter. We've had a hideous quarter. Happens, but still holding my Aussie New Zealand targets. Yeah, I got out here with a loss, and that's all we got. So hopefully this reversal alert holds. This is a beautiful triple top. We got a reversal alert, and we batted into that level, bounced, and they ran it over very quick. We ran straight into this accumulation. So all I can really see at the moment is range expansion. However, there's a 3-bar reversal going in now. Again, we talk about candlestick patterns. Yeah, this is my favorite candlestick pattern on the planet, 3-bar reversal. Yeah, it consists of buyers buying hard, big, strong push, trying to continue the move, failing, sellers trying to start a move to the downside, failing, followed by the sellers actually taking control, meaning that the buyers who made that move did not have enough oomph to carry it on, and the sellers have overpowered them. Typically, from that, you get a bear move start. And obviously, if it happens in the opposite direction, it's a bull move. But that's a good sign, isn't it? However, I don't like that wick. But potentially, you know, this is what I mean. Inside bars, 3-bar reversals, hammers, shooting stars. Yeah, sometimes they will work, sometimes they won't. If that is going to be a 3-bar reversal, you'll be breaking that level through that propulsion gap at some point back into the 2472 area where the market tends to bounce from. If it doesn't work out, you'll be back up into that range. But I'm out because it was just too painful to hold it any further. So not doing what it should do, does it? Morning, Mayor. Morning. It's afternoon. Market's opened as well. I forgot to trade the S&P this afternoon and the Nasdaq. Never mind. Beautiful breaks this morning. If you traded the stock index hedge or opening range breakout strategies this morning, DAX and FTSE parabolic today. Beautiful moves. Very, very, very nice. But not sure what they're doing now. Why does that keep resetting itself? Something's gone hideously wrong there for some reason. Every time I open that, it's reset to 1970. Done this before in the past, and I've never figured out why. Anyway. Right, that's all I've got for you today. So there was no reaction to Michigan. A bit of a bear move off of it. So, or rather, bull move for the US. So I'd imagine the Michigan sentiment was bullish. Bearish. There you go. There's a prime example of the news doing absolutely the opposite. Yeah. So we've had a negative reaction and the US dollar's powered up. So not really doing anything, is it? So just coming back into the range again today. So absolutely nothing today, movement-wise. So we'll see where we are on Monday and see how everything goes with next week. But next week, we've got a fairly light news week, apart from obviously CPI. So this is the big one next week, inflation figure for the US. We've got Aussie unemployment as well. But that's about it next week. So there's nothing much exciting happening next week. It's a bit of a weak news week. So we've got bits and pieces scattered throughout the week. Got PPIs actually, which are fairly impactve, but unlikely that will do anything before the CPI number. So that's really what we're waiting for next week on Wednesday. So see where we go. But bit of a dud week this week, unfortunately. There's not a lot of movement at all. Managed to make some money, but not huge amounts. I'll post that set file in Telegram for in Discord. I'll put it in Telegram as well for the position trader EA for that RSI2 strategy. But as I say, I just made that up. So you'll probably find much better settings. And I only tested it on Aussie CAD. So it might be absolutely terrible on other pairs. Yeah, it's just random test. So I'll put it up and you can obviously play around with it. But that's very similar in the way that I'm thinking of strategy for RSI2. So, but I'll be working on that possibly over the weekend if I get time. But if not, next week. All right. So that's all I've got for you. Thanks for the tips. Very much appreciated, David and Steve. Very nice. I will buy lots of ice cream over the weekend. And yes, you have paid for my mum's flowers. Although I can't tell who you are because that will start the conversation from hell. But anyway, I'll be back on Monday. So Monday, we got inflation expectations in the morning for New Zealand. So I'll be on at 8 o'clock on Monday in the morning, UK time. We'll do an analysis of the week, have a look at what's coming up, just do a rundown of every pair, see where we go. All right, have a good weekend. Anything you need, let me know. I'll be in Telegram, Discord. Other than that, I will see you guys on Monday. Have a good one.